So if your insurance rates went up, whether it's your house or your car, and you're wondering what changed because you didn't do anything different, let's discuss the main things that are causing these rate increases and how you can combat them. The first piece is you've got to check your insurance score. So that's essentially credit. If you look at what's called a declarations page, that's that whole 50-page sheet that they give you, and somewhere in the middle is your coverage, and there's all these descriptions and the new changes, because policies change every single year. Two things I've been finding when I go through everybody's renewals is I'm finding either A, your insurance score may have changed and you've gotten a worse insurance score, which is not necessarily your fault, but could be part of a credit. That's tied to two different things. It's either credit or your profile. And technically your profile is part of your credit, but it's essentially claims history, which we're saying in this case you haven't had any. The credit does play a factor to a small degree. And in that number, it's gonna look like a credit score. It's not really a credit score, even though they're pretty much identical. 680, 750, stuff like that. You can almost tie it to what your credit score is, but there's a lot more happening there. When you start to have claims and tickets and the territory you live in changes, all of those things, you're gonna start to notice that's gonna make a big impact. So that's the first thing you can look at is your insurance score. If you take your old declarations page and your new declarations page, and if they show that score, then you can look at those there. Also, they have to list any incidences on that page as well. If you've had a claim that wasn't yours, that was falsely pushed into your name, then you can dispute that. That's easy and simple to do, especially if it's not yours. We can look at the license, they can look at the driver, they can look at the ticket that is attached to that, and an underwriter can remove that if it's not tied to you directly. The second thing is possible drivers. That's a big thing for insurances, more so now than it ever has been, because there are a lot more claims happening with newer vehicles. So anyone that's not accounted for in the household, it doesn't mean they have to go on your policy, but in some companies and some scenarios, they require that you either exclude them or add them. If they have their own insurance and they're on their own, and there's different situations for different policies. So talk to your agent to find out if that's a possibility, whether they should or shouldn't be on your policy. And I know we're talking about price, but it really matters with the person that's on your policy, because if they're not listed and they state that if you don't list them that they're not covered, then you don't have coverage for that person. So if they go and drive your car, you thought everything was fine and dandy, I gave them permissible use, you may find that the insurance isn't going to back you up in a claim if that scenario happens. So be very careful. It's not about cheating the system or getting the best price because you told them there was someone or wasn't someone in the house. It's about knowing that you're covered correctly and then getting the right company that fits what you're looking for. The third thing is, which is a major piece I've been seeing, is the territories have changed. A lot of these companies are remapping territories, so the location you used to live in is different now. Not different as if you moved, but different rating. So let's take, for example, the zip codes. There's all these different zip codes. They lumped them into chunks. So some people went down, some people went up, but the average got better. They don't want certain zip codes to have just a big push on price when it's almost discrimination in a zip code. If someone can't get out of that zip code or whatever the case is, then there's got to be something to help them. So they lumped them into better zip codes so that now some people are getting better, some people are getting a little bit worse of a rate because of that. The fourth and another major piece is that they're changing the products. Take a look at your declarations page and the changes that they've made. A lot of policies, a lot of people don't understand that there are addenda. I used to years ago wonder, like, how can they change that? That's illegal. They can notify you and let you know when you accept that new policy, here's the changes that we're making. Some companies have added to their product line, which is a benefit, but it might not be what you wanted. So if that's the case and it's not the fit for you, it might be better for us to look for a different company. By the way, if you are searching for a new insurance company, we do home, auto, and commercial. I'll put a link in the description below where you can do a quote with us. We'd love to at least help you out and see what options you have available. Otherwise, the fifth is true. When you hear all the other agents just say inflation, that is still a piece of it. It's inflation on cost of repairing a car, inflation on scarcity, it's inflation on labor, inflation more so on medical than anything. The medical in certain states, as example in Michigan, has gone up in increments. Back when we changed our laws in Michigan specifically, they lowered the medical to appease the way that they wanted to fit. But every year that medical was allowed to increase their rates and increase their prices over time. It's been for almost 5 years now since they've done that, and that medical has started to creep back in. On top of that, inflation has also hit their industry. So now the medical claims, even though we have more claims than we ever have, higher cost claims. That's just playing a factor into the overall large increase of your policy. So if you're wondering what can you do and what are your next steps, should I shop, should I not shop, whatever the case is, you've got to make that decision. I personally am in that same boat. I have about $1,000 more this year that I have to pay between my home and my auto and my personal umbrella policy. Don't like it. I don't like it at all. But the company I've chose is the product fit, is the right coverages that I want, and I'm okay with paying it, even though I've got to rework my budget for it. It hurts, but it's the way I want the policy to be. I did check around and look at some other options, and they're still competitive. I could save $100 or $200, but I'm giving up way more in benefits and coverage than I would if I didn't stay with that company. So that's the thing you have to decide, is if you want to shift. If not, that's where your agent, one of us, anywhere you want to go, you start talking with some agents and figuring out what's the best fit. If there's other companies that can offer a similar product that give you a better deal, better pricing, better discounts, maybe there's an affinity that you can apply for. If you're a college alumni, if you're a retiree, if you are a teacher or have an engineering degree, things like that can actually benefit you. If you've added special security systems to your house where you're paying for that ADT system, if you're a new roof on the house, and it's all of these things can add up, and that's where that discussion with the agent is going to come into play, not only with your current policy, but with any future policy that you move to. If you don't have your home and auto or renters and auto combined, you're missing out on a ton of deals. That's about a 20% discount that you're losing by not combining the two. Now, keep in mind, the house has been a lot more restrictive in most states, and because of that, I've been noticing we've had to break up policies more often than not. But I got a feeling in the next couple of years, it's going to lean back towards where they want all of that. The other part you can do is something called telematics. That's a huge benefit to people, to where everyone says I'm a good driver. You can prove it. You can load an app. They'll watch you for 90 days or whatever their course is. And if you show you don't brake hard, you don't accelerate fast, you're not driving at 1 a.m. in the morning every day, you're just a good driver, they're going to give you a discount based on that. On top of it, some companies will allow you to continue the discount even though the 90 days is up. They never remove the best discount you got, and they just keep adding to it if you get better and better over time. So if your rates have gone up, it may be time to talk to your agent, or it might be time to shop around. I'll put the link in the description below. If you're not aware of the coverages that you have to carry, I'm going to put our Car Insurance 101 video here that'll go more in depth. If it's more home focused and we're talking about the home part, I'll put a video here that goes into depth on the home as well. I'm Mark with Valor Insurance. I'll see you soon.